Alright, welcome back. You're watching Buy Now, Sell Now, and it's time to take the queries that have started flooding in. In fact, they've been flooding in for quite a while. Thank you so much, everybody who's tuning in from the various parts of the country. We're going to start with a question from Dashrath, who's writing in from Anandpur. And he's asking about ICICI Bank. Kunal, this one's for you. He's pointing out that it's, or at least from what he's seen, it's not moving as well as Axis Bank. And he's got 45 shares that he's bought at levels of 718. Should he hold on to this, or should he move on to something else?
I think you should hold on to ICICI Bank. Yes, the stock is underperforming, its other peers, but then I think it has got to do with the broader market trend as such. Because we have newer banks which have started to perform pretty well. So HDFC Bank looks very attractive. Kotak Bank has done pretty well relatively. IndusInd Bank had also a steady rally in that sense. So when you have the laggards which tends to outperform the leaders of the pack, they generally you go into a resting period. So I think in that sense, ICICI Bank is just about going through a consolidation phase, and I think it's come back towards the lower end of the consolidation. So it's not as if the stock is already at its lifetime high levels of 725, 730. So I believe in that sense, it could be a good time where you can hold on. I think if the momentum comes back again for ICICI Bank, maybe over the next 1 or 2 weeks, you could probably see the stock getting back towards that 720, 725 zone.
All right, the next query is actually coming in from Sagar, and he wants a technical view on Cummins India. He's saying he's holding about 3,000 shares, which he's purchased at around 500 rupees per share. He wants to know, should he go ahead and book his profit as the stock is coming close to the trailing stop loss levels of 900, or is it just a temporary fall? So what should he do, Kunal, with his holding in Cummins India?
I think you should look to book out profits over here, because the fall which happened on Cummins on Friday specifically was a huge volume-based correction for the stock. Now, typically what happens is when you see such kind of drop, the previous major lows or the lows of those levels on those days, they generally become very important levels as such to try and look at the weakness in terms of price trends. The stock has also gone through a follow-through downside. So maybe if you want, you can probably trade your stop losses to Friday's low, which I think is around 878 for Cummins. But my sense is that looking at the weakness of the charts, the price volume correction which happened on Friday, there could be a higher possibility that the stock may break below this 878 levels and fall lower than that as well. So I would suggest booking out profits at current levels, or if you're looking to try and trail your stop losses further downside, keep it at 878 levels.
Okay. All right, we've got a question coming from Balan, and this one is on the real estate space. He's got, and this one's for you, Ashish. He's got DLF, Godrej Properties, as well as Kolte Patel, and he's got 100 of each. He says that he's making gains of about 10% on the three of them cumulatively. He's wondering whether to hold on to this, and I think quite a few people have said that real estate is the place to be, right? It's buzzing in trade today as well. Should he hold on? Should he move to something like an IT name like Happiest Minds, is what he's asking.
No, I don't think so. You should be in hurry to book gains in real estate sector. After a pretty long period of lull, now we have seen good traction in the sales data from real estate companies, as well as the valuations are also quite attractive now in real estate sector. So, in fact, you have selected all three companies which have really given very good returns in the last 3 months in real estate. And in my view, we should continue to hold. I'm expecting even 10 to 15% more upside in next 1 to 2 months in all these three stocks. So, it doesn't make sense to book gains here and shift to IT, which has seen already very big run up in last year. In my view, real estate sector will give you very good returns over next 1 year. So remain invested.
You're saying that is it advisable to enter Global Spirits at the current levels, and what is the best entry price, Kunal? Global Spirit, which one do you think it makes sense to enter at current levels, and if not, then what would be the right entry price?
See, I think yes, the stock has done exceptionally well last 4 to 5 months. It's risen up, I think, 5 times or 6 times from those 250 levels in approximately. So it's done phenomenally well in the last 5-6 months. But I think at current levels, if you're looking to enter, I would suggest wait for a correction, at least a 10% correction from its highs of 1400 should be a good starting point. So maybe around 1260, could be a good starting point for Global Spirit. If the stock goes into that kind of a corrective mode, maybe you'll have to wait for some more time for the stock to try and correct and come back to those levels. But I believe rather than buying at the higher end of the point, you should look for corrective to levels. At least a 10% correction should be a good starting point for averaging out or buying the stock at those levels.
Okay, relatively new listing. So unfortunately, we're not going to be able to get you a short-term view, Manohar. KIMS Hospital, he's holding 50 shares at levels of 1,000, he's saying. I'll come to you, Ashish, on this one. Would you say that he should hold on?
Yes, I'll advise to remain invested in this stock. Already, we have seen good gains if you have got this stock at the time of IPO. And one thing is that from 1400 levels, where it has touched high, already it has corrected by almost 10%. And now again, we are seeing traction in hospital stocks because then again in this quarter, we are going to see very good numbers. So the way like we have seen momentum in Apollo and Fortis even today, Kims will also continue to do well. So my target for a couple of months is 1350 to 1400 in Kims. So remain invested. You are going to get very good returns.
This one is also for you, Ashish. This one coming in from Prasad saying that he's looking to invest in Asian Paints for the longer term since it's run up a lot. Is it a good idea to invest at these current levels, or should he wait for some more dips to come in about for Asian Paints if he wants to invest some more? What's your take, Ashish, on Asian Paints? The longer term looks really good, and if Prasad wants to invest, do you think he can go ahead and add some more at these levels?
See, whenever you want to add any blue chip in your portfolio, you need to adopt SIP approach because you don't know what is peak and what is bottom. And if for companies fundamentally sound, mostly it is finding place in all the large cap fund for FIs or domestic institutional investors also. So this is the reason you don't see much fall in such stocks because they are NAV protected. So my suggestion will be that you make a SIP that on every 50 rupees fall or your 25 rupees fall, you will keep on adding this stock in your portfolio. So you will not miss the rally. At the same time, whether fall comes or gain comes, you can stagger your investment in Asian Paint. So suppose 100 rupees you want to invest in this company, at least start 10 rupees today, and 10 rupees upside or 10 or a certain upside or certain downside whenever you get start investing because it's a blue chip stock will continue to give very good returns to you over a longer period of time. So yeah, start investing.
We've got Sanjay Kunal, who's making a decent amount of money on a trade, I believe that he's making 15,000 shares of IOC at levels of 113, around 9% if I'm not mistaken is the gain right now, or a little more than that in fact. What do you think that he should do? Should he book at this point or should he hold on?
You should hold on. The stock is just broken out of its multi-years of downward sloping trend lines, and I think looking at the way the historical portions have happened for IOC in that sense, it's given a multi-month, multi-year rally in that sense. Crude also going up, in that sense for many of these oil marketing companies. So I would believe that this could be a start of a fresh trend for IOC. And I believe if you're already in the money, you can probably trade your stop losses. Maybe book very very minor portions of your profits just so that you can benchmark your trades at those levels. But I believe that you should look to hold on to it from more of a medium term perspective at least.
Query is on First Source. This is coming from Syed saying that he wants view on First Source. It's at 195 levels from the last few days. Do you see scope for further upside, or are charts indicating a downside coming in for First Source? Kunal, Syed, he's asking about First Source, but I'm not sure whether he's invested in this particular counter or is looking to invest in this counter. But nevertheless, how are the charts looking for First Source?
Charts are attractive. The stock has also completed this correction phase. So from 240 levels. The stock had come back towards 180 approximately. So it's been a good sizable correction of more than 20% for first source. That generally is a good zone to enter for guys who have missed out on the earlier uptrend for stocks. So I think on that sense, I would suggest that it could be a good level where you can look to start enter if assuming you've not entered into the stock earlier.
Ashish, Z-Learn is a stock, and we've got Nandakumar from Teni who's bought 500 shares at levels of 17, and that more or less is has been the weighted average price in the recent past. It's currently at 14 though. Do you have a view, first of all? Even if you don't, would you suggest that he can find a better option in the market, and what would that be?
Yes, my suggestion will be to exit from the learn asset, because I don't see any near by bigger trigger which may again take the stock 17 or 20, and the kind of corporate battles are happening between the enterprises and largest investor and management, etc. I think some pressure is going to remain on Z Group stock for some time at least. So my suggestion will be to exit from this stock, and couple of ideas which I can give you. First is Trident Limited. Look at this textile stock. I'm expecting against 300 crore profit last year. They will do at least 800 to 900 crore kind of profitability, and they are into textile, chemical, and paper, all three segments. Another stock which I can recommend you is DCW Limited also. Again, a small cap stock, and they are having almost a lakh ton capacity of soda ash, and the way soda ash prices are moving up, but this is again a stock which can really perform well going forward. So you can select any of these stock, and surely you will make up your losses. At the same time, you will gain some money in shorter term.
Okay, this one is coming from Kaustubh, and he wants to know about Godrej consumers. How does it look in the medium term? It's consolidating from the past couple of weeks. What's your take, Kunal, on Godrej consumer products? How is this counter looking like? Like Kaustubh mentioned, he's saying that the stock seems to be consolidating for the last few weeks. Going ahead, what are the charts indicating for Godrej consumer products?
So yes, consolidating, coming back towards a retracement support, 1980 seems to be a good support for Godrej, consumers, and I believe from 1140 or 1130 levels, if I'm not wrong, the stock had already started to correct. So I think in that sense, it should be a good entry point for buyers who are looking to buy the stock at current levels. 980 and 1000 could be a good support. So I think at those levels, a fresh entry could be made over here.
Okay, I'm coming back to you, Kunal, on this next one. It's a short-term query. We've got Suresh from Bangalore who's asking about IEX, Indian Energy Exchange. He's gotten at levels of 348. So, very attractive buy price. The stock is currently trading above 600. What should he do with this? And he's looking for short-term levels. So, should he book at this point? What are the next targets to watch out for?
See, I think yes, I believe you can look to book profits over here, maybe 50% of your profits, if not full. Yes, the stock is looking attractive from long-term play, but just on the short-term charts, many of the indicators are coming into an overbought territory. Now, the first set of trading stop loss for your investments over here should be closer to 580 mark for IEX. That's been a huge support for the stock in last 1 month. But I sense that if the stock breaks that support, you could see a more sharper correction which could come by in the very, very near term. So it's a good long-term story. But since you've bought at much lower levels and you're sitting on some good profits, I would suggest booking out maybe partial profits and then trading your stop losses, say closer to 580 mark.
This one is coming from Vikram, and he wants a view on RailTel. He's been holding on to the counter since the listing day at a price of around 174.7 rupees per share. He's holding to have a target of around 200 rupees per share. What are the prospects in the short to long term based on recent news of its merging with IRCTC? I will take this one to Ashish. Ashish, what's your view coming in on RailTel? Do you see further upside in this counter, especially after the news reports that we'd also seen on the likely merger with IRCTC? But yes, those are reports.
I think Railtel is one of the underperformer stock. If you look at the other PSU stocks per se, and looking at even IRCTC performance, Railtel it doesn't look that attractive. So my suggestion will be to exit from this stock and take position in IRCTC, because this is the stock where a lot of accumulation is happening by a lot of long only funds, and being the monopolistic kind of businesses which institutional investors like. This is a stock even can touch 5,000 to 6,000 rupees in maybe next 1 year time. So my suggestion will be to exit from here and swap it with IFC.
Ashish, quite a few stocks that are in focus on account of the kind of rally that they've seen in the recent past. Tata Teleservices Limited, one of those stocks, it's gained significantly. In fact, it's at an upper circuit in trade today as well. We've got Sunny who's asking whether it makes sense to get into something like this for the long term. What do you know about the business prospects, and should someone consider this?
Sorry, unfortunately, I don't track Tata Teleservices stock as such, so I'll not able to comment. I think better to take technical view on this.
Okay, I will attempt to do so. What does one do, Kunal, based on what you're seeing right now, right? It's a stock that consistently, I think, hits upper circuits. How does one look at this? Should one try to get into this? And I'm talking about it from the perspective of a retail trader or an investor.
No, not at all. I think you should look to book out profits, even though I admit that I don't track the stock very, very closely. But then I think it's time now that traders migrate from these small cap oriented names or mid cap oriented names, the ones which are very, very high beta and circuit oriented, for example, to coming back towards quality. I think it's a good time to try and do that, adjust your portfolio in terms of the beta nature, rather than looking at these attractive names that these would continue to hit upper circuits from a long term play. I think it's now time to try and look at large cap stocks. So I would definitely suggest and avoid. If you have already bought, then I would suggest booking out profits over here.
Okay, this one is coming from Shanmuga Sundaram. He's purchased AstraZeneca 70 shares that he's purchased at 3,300 rupees per share. He wants to know whether he can continue to hold on for the next 6 months. Kunal, what's your take on AstraZeneca? Do you think then Shanmuga can hold on to this counter? No doubt it's off those buying prices.
Well, yes, you can hold on. I would suggest maybe keep a trailing stop loss around this 3,000 mark for AstraZeneca. Even though the stock is sluggish in the last 4 months, but I believe 3,000 has been a good support last time around. End of 2020 as well, the stock had bounced off from those 3,000 levels, and I think in a matter of 1 or 2 months, it had jumped up towards 4,500. So purely, I think in that sense, I would suggest keeping stop loss closer to that 3,000 mark for AstraZeneca.
Okay, gentlemen, it's time to hit the rapid fire segment. Ashish and Kunal, you know the drill. I'm going to, or rather Cheryl and I will throw as many questions to you as possible. Do try to answer them as quickly as you possibly can. I'm going to start now. Tonya from Trivandrum is asking about Cummins, bought at levels of 960. This is for you, Kunal. 100 shares bought at 960. Do you hold or sell at this juncture?
Well, I would suggest to exit at current levels. I sense that the stock would go into a corrective phase further.
Okay, this one is from Mahendra Patnaik. Is it a good time to buy GMR Infra at this level? It's gone up recently. What's your take, Ashish? Does it even make sense to invest in GMR Infra now?
Yes, you can start investing in this stock. Hardly any retail float stock is there if I see their shareholding pattern. And now this post this restructuring, this is going to be one airport company. So it will be GMR Airport Limited. And I'm expecting a price target of 50 very soon. So buy one.
Okay, Kunal, a quick view on IT broadly. Now, we've got Sudha saying that she's got 10 stocks and she's not going to the details. But if there's a rotation that you're seeing out of IT, do you think that she should book out now and buy at a later date?
It depends on the extent of profits you are making. But if it's a very, very old purchase on the IT names, I would definitely do that and suggest to do that to book out profits over there and shift to some other rotating sector, which the markets are currently favoring in.
This one is from Satish. He's saying he's purchased Dr. Reddy's at 4,616 rupees per share for the short term. Should I continue to hold or sell? What's your take, Kunal?
You should hold on. The stock has given a breakout today above its 200-day moving average. Looks very powerful in terms of short term. Trade would expect another 4 to 5% upside over the very near term.
A lot of short-term queries. Polyplex Industries is the next one. Kunal, this one's also for you. We've got Puneet, who's asking what the upcoming targets are. Would you have any for him?
So I think the nearest target which you can keep for the stock will be around this 1800, 1820 mark. That's from a very, very short-term view. But I think if that gets taken out, then keep 1800 as a trading stop loss and look to ride the trend further.
All right, and with that, we come to the end of the rapid fire segment as well as the query segment. Thank you, Kunal, as well as Ashish, for joining us on the show, taking us through the divestment candidates and also resolving viewer queries. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, lots lined up for you on the other side of the break, so don't go anywhere.